hit the like. Don't forget to hit the subscribe. Also ask us and tell us what you think is going to happen in these interactive live streams. Do you think it's going up? We're going to show you 3 charts as to why we think it's going up and why we've been talking to the community during the day and actually saying gold. Yes, gold was the first to start showing signs of walking up. But we'll come back to that in maybe a bit. First of all, we'll start you with the key chart that is on a daily time frame. I've got it on the 2 daily now. We'll turn to those charts now and we'll show you it. And it is the Bitcoin dominance chart that we've been showing and why we feel that you have a 58.5% run for Bitcoin dominance to still happen. So this is on the daily. Remember, on a bigger time frame, we're actually bearish this. Weekly, monthly, we think it's going to... This is one of the last of a few. That could be very, very bullish. However, on the daily, on the medium time frame, we still got a bit more height to do, and we've spoken of this HVF structure. Let's get it properly drawn. Let's get it properly drawn. Where are you? Where are you? And this one is saying 58.5 before it's probably done. Now, maybe there's another one on a smaller time frame on 4 hours or 2 hours or 1 hour. There could even be another daily, but we think this is coming to the end of the move. What happened? You had a pause. You had a pause. In fact, you came back to your interim here after breaking it. Remember, interim targets broken with momentum, then pull back. Where's the support come in? Just in and around your interim. That's that dotted line there. Then we got a little bit of footsie. You see that? There, and there. And now that we are done, we are showing that we're done. A, with a 57%. B, with the second interim of the upside hunt volatility funnel setup on the daily time frame that we were watching and observing and saying, this is going to be Bitcoin reflating first of the cryptos. Remember, I said gold started before. That's why we were watching it in the morning. We have a potential upside HVF there, and we're saying king of the macro anti-fiats, even though the dollar is getting a little bit of a bid back after its yen bludgeoning. It was a Japanese milkshake turned upside down right there. So anyway, leaving that for them now, what we're actually getting is second interim, now moving for target. Typically the open territory is covered with momentum. That is the open territory. This was the open territory that when you did that, and that, pretty fast. And this is the biggest part of the open territory, and targets should be run. The round number at 58.5. So I see us making this target of around 58, 33, 34, and running through the 58.5 overall, generally. And this has had us, well, we think it's going to reflate, but we didn't want to over-gamble. It's a 50-50. We needed more information. And as it's been coming in, Bitcoin's been giving us this. Plus, we've got the dominance chart. Dominance chart, Bitcoin re-inflates first and hardest. All the big money comes in for the cheap Bitcoin. They were uncertain at 48,000. They're more certain at 62,000, as it always is. Why? Because you had to buy real fear. But we thought that 48K might, in fact, be one of the best entries. To be honest, I wasn't prepared to take it because you could have had a third sell-off, 1.618 as per Elliott, down leg, bit of a bounce, and then an even bigger one. In fact, we can't say for sure that's still off the table, but the rate of increase. So let's go to the Bitcoin chart itself. The rate of increase has been suddenly got a real breath of fresh air in it. And I think the fact that data has generally been less hysterical has helped. So let's have a look at this. This is the Bitcoin. This is the potential recovery. I'm going to go back to the 2-day to give you this overall broadening structure. Our bias was always for reflation on general, but it was a super dicey high fear moment because it was one of the harshest sell-offs that have happened. We could have had not every broadening structure. And there's lots of people who are now wanting to talk about broadening structures, now that we've been talking about broadening structures. And they even started using our language. It's fascinating to see. It's amazing. They'll go, descending broadening structure. They won't have a splitter on it showing why it's descending. And they'll say it's descending even if it's like that, with a descending structure, on a bottoming, on a bear pole, and they don't say bull or bear pole. And what it's important, and that you've learning from us, is that actually a bull pole with a descending is a bit like a flag. It's generally expectation is for the higher line to break out. It's interesting, Peter Brunt has reversed as well. He was saying higher highs, lower lows, lower lows, lower highs. So he was saying lower highs and lower lows was actually bearish. Inside this macro bull, where this is the predominant trend, and you're getting a continuation pattern, that is actually giving you lower highs and lower lows, but only on a much smaller pullback from whence you've come. You've got to remember, this is from way down 25K right the way up to 72K. This is not a selling bear market. This is a continuation by scale, by proportionality. This broadening structure, which is descending of nature on a bull pole. That's what all the other guys still don't have, and your splitter is what tells you what's the angle of gradient. So this point, this interaction here with the lower part that we've doubled up, and we'll now triple up, was actually the idealized buying. The problem you had is you had to have balls like this. Why? Because it was throwing down extra hard, and even patterns fail. So I'm not going to tell you how I was braving that one. So we thought, let's see how it goes. There's many ways. You can snap back violently after making a strong wick. Let's clear our face a little bit there. You can snap back really violently after making a strong wick, which initially we didn't do. Look at the lower time frames. There was a delay. So the super instant comeback didn't materialize. Let's take it to the 8 hours, maybe approximately, and you'll see we actually had a little bit of this. Initially, strong rejection. There's your wicks, and then sell off. It's actually now that we're showing a bit of sprightliness, that second stage. And what's obviously happened in the meantime, data has come in. There's not been anything cryingly chronic. It's looking more like, unemployment claims. Okay, it was 233 instead of 241. Remember, this all started on two big things. We have been watching the Japanese yen for ages and saying on the interest rate parity, it's been a long-term portfolio trade until the yen carry trade unwinds. That unwind really beautifully. We brought it up in our Substack and said that is sign of stress and people de-risking. And that was caused by the Bank of Japan actually doing a tightening just as American labor, non-farm payrolls, live trading day with us, the Friday not so long ago. We got a very bad number and a real sense of weakness. And for the first time, bad news, instead of being good news, bad news became bad news, and good news also became bad news. You went into fear. And at the same time, US looking now at a likelihood of cutting, and then maybe a double cut at the next meeting, and possibly more to follow. You've got the interest rates in America going down, and actually at that very moment, just before then, Bank of Japan had done their first hike in a long time. So you actually had two central banks moving in the opposite direction. Major wetting of the bed. It was fun to see everybody else suddenly becoming experts on the USD JPY that haven't been watching it. We've been going on about it for ages, and the Nikkei for a very, very long time. And why that special dipping well of cheap finance that always gets dipped into for the dollar bulls that always say how strong the dollar are suddenly gets real weak when that has to get unwind, and you find out how many people have been borrowing in yen. No, you don't get to borrow at 0.25 with a little bit of margin brought on by the banks. That's for the hedge funds, the institutions, and everybody else. Hell, I was lucky enough to put a house mortgage once in the UK on Japanese yen. I was paying less quarterly than most people were paying monthly on smaller homes. That was just luck. It was cheap financing, and I was prepared, and I was happy managing the risk of the currency as it was at the time, and it worked very well for me. But you needed special relationships to do that, and most people don't have access to do that. So we got the unwind of the yen. Long way around, the unemployment claims is coming in less bad than expected. You can rely on the banking cartel to go really low ball. Oh, we need to push up the market. Let's say we expect a terrible number now. We're all afraid. And there you come in at 233. Oh, what a major success. It's not 241. That's 233,000 new people that don't have a job. Okay, it's not great at all, but hey, it beat the expectation. This is all about expectation management. So what's happened is we got a little bit of news that the markets can treat favorably. So what else have I got for you to chart show? This is a very interesting chart. So I'm going to talk to you about gold and say how I was watching gold turn first. And this is the value of 360-degree analysis, because we had a feeling we've got to watch. We've got to watch. It's going to turn into either a turning or it's going to be a weak rally and maybe a secondary sell-off. And what happened is we were watching over here, and I said to the community, I think I'm going to add to my gold longs. And as soon as I did it, we got a little sell-off. I was watching this bottoming here, and I was saying, this looks good. This looks good. You got a rickshaw boy candle there. That's him over there. You've got another lower volatility doji candle there. That's him there. Then we got a one little hammer there, and then we got another bigger hammer with a green body there, and it looked like basing, and then we were starting to move up. I was watching on the low time frames. Why? Because I'm looking for the god market of anti-fiats to start showing he's getting a bit of a bid, and he's not going to run the shit the bed low moment. And we said, my take is that that stop should not run if we are solidified. If it is run, we've gone full risk off. Even the safest money in the house is off. Bitcoin will go down in that situation, and crypto will have a secondary sell-off leg, the three leg at least, so one sell-off rally and another, and possibly a second rally and a fifth leg sell-off. This is a more serious game. And we have to consider all these possibilities. Right now, gold has actually retraced 50% at least of that fall. Let's get the Fibonacci tool. And for us, this was an early sign that the people afraid of real money and debt are still choosing to get back in gold at the cheap prices, and potentially for us to get an upside HVF on gold, which funny enough will still turn out good for Bitcoin, because it will probably mean the dollar isn't getting super strong straight away, first of all, and that the alternatives to debt financing, currency and debt are not getting bid up too high. That'll mean those rate expectations on the yield that all sold off a lot will start going back up, and the debt valuation will go a little bit down. Especially if the dollar's creeping up somewhat, you'll get the debt valuation down. What means that? Well, gold and Bitcoin compete as collateral against UST Treasury bills, my friend. And people, when they park money up in dollars, buy T-bills and get interest. That's what's happening. So the currency and the T-bills are the alternative. Trumpety, trumpety, Trump. Your choose left or right Punch and Judy show. Which hand do you think is prettier on my beautiful body? Trumpety, trumpety, Trump suddenly become an all-time crypto star, where previously he was like, I'm for the dollar. And he's talking up a bunch of games. What suddenly happened? Interestingly, it looks like a settlement being mooted on XRP. Other news. Oh, so the Biden administration that doesn't want to look like they're backward and staying behind on the wonderful world of crypto, your new electronic surveillance financial prison system, because they don't want to look like they're backwards and behind on that. Suddenly we're seeing a potential mooted solution for XRP and SEC, 125 million. Pay 125 million for not being a security, but not being allowed to make us look bad. Because we always win, we're the sheriff, and you always pay. And the fact that we attacked you and we're not backing down, you at least got to pay, because, you know, we're right. We're the boss. We're the extractor in all of this. Which is also why I support Richard Hart's and anybody else who's being attacked by the SEC, by the way, against the max extractor. But they always come away with their filthy little rubby hands with your money. Even when they don't get the conviction, they want dosh, and they're going to take it from you. So isn't it interesting that this was occurring as Trump was positioning as a star? So now the Democrats in their final arse end of their couple of 6 months maybe potentially leaning a little bit behind closed doors on the SEC in that lower world of left versus right. Remember, we live above that. Both sides are controlled, but they still want to not look totally incompetent. Maybe there's resolution in the air for SEC, which could begin the process of unleashing XRP, although we haven't got that excited because it hasn't done that much apart from get back into the high end of its existing range. So that little sidebar aside, the three charts, we've shown you Bitcoin dominance. We're also showing you the return of gold to reflate back that took the 50% and is in and around 55% on its journey back, and potentially in due course washing our face. It did give us a little scare there. I was long in my gold and then second little dip down. That of course gives you on a smaller time frame a little bit of a double bottom turn as well. So it's not too bad. It's likely to have performed already though, so it's already old hat if you look at it, but that gives you, yes, little bit of a W bottom, not at the absolute low. That was your spill the beans, wet the bed, extreme low, but that probably will give you your first target where you may have somewhat of a rest. Not yet done. So that was the beginning of, okay, we're going back into the other security alternatives apart from treasuries, because treasuries went up in value, down in yields when everybody got afraid. And everybody said, interest rate cuts, therefore buy treasuries. There's still the morons, there's many of them that are going to go long debt in a debt failure time, forgetting that suddenly things could reverse and they could go immensely down. That is a bit like shorting, looking to make money shorting Bitcoin in bull season. You could make some money, but you're going to have to be very quick, very fast, or you could get positively gapped wrecked. But anyway, we'll leave those that want to buy treasuries and TLTs to themselves as much as they want, and they'll say, well, it's just a trade, it's just a trade. Debt failure is debt failure. It could turn suddenly. You may not get all the cuts you think you'll get, in spite of the notion of the fact that there will be at least some coming the way. You might be shocked because the market will not take that debt on. So we watch the debt markets. So gold is the other one. Now it's slowing a touch now with a tiny bit. So you may find if you rush in and bought Bitcoin at this very moment, it also might just slow down a wee bit. So you want to watch when gold, you see that? A little bit of a selling wick. We've got the gold drawings still kind of over the same Bitcoin drawings, and you can see they weren't that far off. You had the second level sell-off here for Bitcoin. You're getting a little bit of a wick calming, That was just before 63, now you're back down 61.8. Okay, so watch gold as the lead indicator. Let it pull back, let it base, and then when you see evidence of it basing, as I was showing you that we were watching in the community that you're not in, and you could have been in a little bit earlier, but hey, you chose just to be a YouTube friend, and we're glad to have you. But if you click the link below, and you paid a little visit, had a chat with our friends, you could get an offer as both a self-study, a potential trading metamorphosis guy, and you could be getting our thoughts as and when they come. And as we get firmer on the possibility of reinflation, we start feeding our way back in. And I have also bought into, yes, the second chart, that is one of the, in fact, it's the third because gold is the second. So we showed you gold, the first chart being Bitcoin dominance, and we also showed you Bitcoin against the dollar, but it's the Bitcoin dominance upside HVF promising a 58.5 that we think is a reasonable likelihood of happening. And now we're in the fast bit between the second interim and the target being run, and it's typically run with some. So you're looking at around 58.5 there. And now we are getting to gold as the chart number 2. What is a third chart that was of great interest to us that was indicating potential turnaround? Now we like the big caps. We tend to stay in the big caps. We don't talk to you about all the little guys, the 397 in the market cap room. We spoke to you about Solana quite a bit. It had a harsh sell-off, as did most of the market as the market went bedwet. However, the Solana dominance in terms of how it was affected. Don't forget, it also got an extra little kick in the balls with BlackRock coming out and saying, no immediate, there's no rush for us to have an ETF for Solana. So BlackRock is the new controller of CoinGo Up. Isn't that funny? Your liberty is controlled by 100% board of chosen ones that actually negotiate new debt agreements with Argentina as if they are more important than the government, the US government itself, and have already been awarded the contract on the reconstruction of a nation that's still being broken down by the military industrial complex companies that BlackRock also own. So they are making money on the bombs and the destruction and the war, and they will make money in picking up the dead bodies and rebuilding the place, and you'll pay for it. In fact, it'll all be put on a debt Ponzi that is inflation, inflation, inflation because of proliferation, and that's how they tax you from under up. It's the hidden tax nobody sees, as well as dragging you into the higher tax marginal rates where they get to tax you even more, and they are also invoking and bringing in all forms of new interesting immigrants in all your nations and putting it on their tab, putting them up in hotels, because there's nothing like wasting money to require further proliferations, bigger deficits, to increase the amount of currency destruction and to increase the rate of inflation, because they're really running very fast now. They must get their new Messiah. They must get their new Messiah. We must slaughter red calves. Indeed. So here you go, there they go, and that's where we are heading. Let's draw the HVF that's on Sol Dominance that we've also shown you, the upside at HVF, Hunt Volatility Funnel Principle, that you can learn all about and be part of with us. That is suggesting to you, yes, it suggested, it was quite a tasty little journey, by the way. So it is suggesting to you that you will, in fact, find yourself at almost 4.46 target in dominance for Sol. And that was your extra little dip that you hit that brought you all the way back, bouncing on our axis, that dotted line, the very midpoint of funnel and structure that no one else has, no one else does. It is bespoke content and creation of yours truly and the HVF team, and you shouldn't try get it anywhere else because no one else can offer it to you. And that is offering you a target of 4.46, which could in fact see the 4.5% run, which is quite a bit higher than it was even on its axis over here. What was it? The stop loss is 2.89%. The just-in-time entry, as we like to call it, over there is 3.17. So hang on a minute. Going from, let's say you waited, you're at 3.1 and 2.89, you're probably just about 3% on the axis. Had you got in on the pullback into the funnel on the axis, or anywhere in the squeezy rising wedge that is typical when you've been squeezing, generally, that you get a fractalization of further squeeze in it, had you got in anywhere, 3% for around 4.5 would be my guess. The target is about 4.46, so you're probably going to do 4.5, 4.6, maybe a bit more. If you get in at 3, that's another 50% of overperformance in an environment likely where the pie is getting bigger. So the overall market cap, Bitcoin dominance is going up on the market recovering. So the pizza pie is actually getting a little bit bigger, and the slice that Sol is of that is going to go up 50% faster than everything else that should also be going up. Including in that dominance is Bitcoin, which is winning against most other tokens. Can you see the value of relative value assessment at HVF method, 360-degree analysis from gold to try be early, because it's actually not waiting for confirmation, as most technical analysts tell you. It's being early with a tight stop that gives you the extreme upside moves with the short risk. But you've got to make educated, calculated risks, and we needed to see that acceleration coming through on Bitcoin after we saw this morning our gold longs making more money on the upside. We were highly prepared. We knew the attack might come. We were watching and ready to do. That's why we're streaming to you. This time you're actually being told within about 5-6 hours of when we would started to talk about the reflation possibilities internally. You won't always get that soon. What are we looking for? Well, it could pull back once it runs its second interim, which is around 3.8. But generally it'll get into the open territory once it's done with the 3.8 level and is looking for the 4.4, 4.5s. And that would be very, very brisk generally. So a good reflation of Solana, and overall taking you back to the Bitcoin chart, the overall taking you back to the Bitcoin chart. So Sol Dom is chart number 3. You got gold, chart number 2. Bitcoin dominance, chart number 1. 3 reasons that technically we saw. There's actually a bonus chart that we haven't been telling you about, that we were talking, and that was USDT Dominance, the largest, most significant. In fact, it deserves to be one of the main three. Maybe the Sol dominance can be the bonus chart. You can argue about that, because like every time I come on, if I promise you 3, I give you 3 plus 1. Just like we do our special time methods on HVF. We never want to let you feel underappreciated. Carry the Romans pack for the extra mile. Always do that. So let's go back to this USDT.D. and you can have a look at this chart. So this is totally different data, and I'm going to double this one up to a weekly just to give you this. So the last time we were talking about this potential chart and everything that was going on was some time ago. This was your bull market, by the way, down here. 2021, that was your 70, I think this was your 79, my apologies, your 69, and that was your 64. So down is good. This is like inverse, it's like the gold-silver ratio. Down is good. This means less people in tether. And what we warned some time ago, we were wondering if there would be a final bear market if this was to be upside. And if it wasn't, then we were about to be making the bottom on making our very first inverted structure in a new trend, which means at that time that base plated low there, very nice, that we were expecting a new bull market to start if this breakout chose to break. And as you can see, that was your slap in the face, that was your blow off high, the dominance went up to there. That was at 9.5. That was peak FTX failure. All the Bitcoin fell to 15,000. At that point, Bitcoin was 15,500, a head and shoulder that had given you a target at 16 grand, literally called the low. By the way, on this channel, go check the previous YouTubes. So this was the first inverted structure in a new trend, which had a target there. We also pointed out that the law of round numbers brought a very important 4%. This chart is unchanged. I haven't looked at it in a while, and I was looking at it today and yesterday for the first time in a while. All these draws are old hat draws. And we were saying 4% is a key level. You didn't hold much airtime. There was another level at 5, and between 4 and 5, you had these tap outs a couple of times. We didn't go any higher on tether dominance. And then we got that final spill. Wham! Blow off. Everyone rushes into tether. That was the bottom of the bull market. So what did you then get? The break here with real momentum to the downside. This proved that in actual fact, Bitcoin is going to go up. The market is turned, tether dominance to go down. That means the money's rushing back into crypto, into the alts too soon, except for Sol and Tron, and the smart money going into Bitcoin. What did you get? Downside break, you make the second interim. What did you get? Rising wedge. You want to see this chart down. Rising wedge. Spiller, absolute thriller. Smashes the target, goes all the way, logical round number, reverses. So what is all this? This was that. A broadening structure again, that all the other people on the internet will tell you badly about. On a bear pole, which means ascending, broadening structure on a downside bear pole equals downside continuation on balance of probabilities. No guarantees. No one's writing a contract for you and saying, I promise, governor, here, I've signed it, real, but on balance of probabilities. Everything in trading is an on balance of probabilities game. Where did the spike end? You guessed it. That top of that wick, bang on our just-in-time fluke. Oh, fluke, more coincidences. We talk a lot about coincidences nowadays with the World Economic Forum and who's all behind it all these coincidences. Anyway, another coincidence for you. Nothing to do with the World Economic Forum and who's behind it all, but actually to do with the beautiful, truth-telling, forensic detective hunt volatility funnel method. And what did you get? You tapped out on that just-in-time level, 6.74, major rejection. This is a bullish chart. This is your bonus chart. It's almost like a 1.5er. You came for 3, you get a fourth bonus one, and it's a fatty. It sings. This is a fat lady with quadruple D's who's going to sing for you her little heart out like one of those sopranos. She's going to go down on one knee and she's going to wail, and the champagne glasses are going to shatter. It is your USDT.D dominance chart. And it is downside continuation, my friends. Downside continuation, broadening structure, bounce on the key round number, 4%. And there you go, major rejection. It needs saying a second time. This is a key rejection at a funnel, and this is a rally in a bear trend in a market that has turned. Dominance down for USDT. This is a bullish chart. This is a bullish chart. Does it mean all is rainbows and unicorns and love and kisses and puppies, and that you don't have a bumpy ride? Not necessarily, but right now on that rejection, it is very similar to the inverse of Bitcoin on the USDT, in fact, even better. And I'll be showing you another chart, but there's this part of the same things I've already given you in 1, 2, and 3, just a different way of looking at it. And this is the kind of analysis we aim to do in our community that you're not getting. But now you're getting a little bit, a little taste, a little bit of fun and games together here. Hit the like button. If anybody said anything of value today or even moderately entertained you, go and tell Schmoogle more of the madman with the bald head. Yes, more of him, please. Let him flourish so that he keeps showing up and helping me as I seek to grow, build great wealth, join his community, become a gazillionaire, live in remote optionality places, none of which are in the West, have a great life while the rest of the world burns in its chosen one Holocaust. Oh dear. So let's have a look at, there was something else on this chart that we did do, by the way. All these top outs. We did ask the question some time ago. It's still there. That's why I can see it. Is this all a macro for your bull market? Yes. Remember, I'm going to have to come and do total dom. I'd drawn the shoulder like this. This was done obviously when we were here. Clearly the shoulder expanded a wee bit, and we have to cover that. Out, out, out. It actually goes like this. I have to redraw it all the way back to the funnel. And potentially on that huge rejection, could we break 4%? Where do we go then? How far do we go? Whoop! Let's kick a leg up high. 1.69%, head and shoulders to the downside, massive. Guess what? You're smiling now. You're smiling big time. The downside of that USD tether, if that head and shoulder were to transpire, that would mean the 4% line being a triggering event heading down will project a target to the downside, bringing you 1.69% with a bit of overrun. You could see 1.5s, possibly a bit more, before you get some degree of pushback, like the 64 sell-off to 29K, on Bitcoin. So that might be a good time to mark your calendar, 1.69. But first you need to mark the 4%, because it ain't happening if we aren't breaking the 4%. Remember, we are prognostifying. We are speculators by nature. We ask what if on uncertain things in the future. It is everything on balance of probabilities, possibilities, etc. It might only be a 0.1. When it breaks the 4%, it might be a 15%, a 20%, a 30%, and getting more. And if it starts to capitulate, this will all be very good for Bitcoin. And this brings us to a reminder of the chart on a bigger time frame that we showed you. Your chart number 1. Bitcoin dominance. Reminder of what we said. On the bigger time frame, this one is due to fail. By the way, it's super interesting seeing other people now talking about dominance. In fact, I'm going to go and show it to you how I originally showed it to you. Inverted, he said. Yes, we have an inverted template. Let's get it on. And we'll take it down. This is Sol inverted. That's a nice rejection going down, which is obviously up. Let's go and do BTC.D again for you so that you can enjoy the view of all of this. We said there's a squeezy over here, and there's going to be an impulsive move. It could be the bottom, or you could have one more move to the downside. As we got closer and we saw the move, we said it's to the downside. You've been rejected at the capping, descending grind line one more time. But before we talk on the daily, we should actually show you the weekly to show you where we are. That's where we are. That's where we are, and it's best seen upside down. Why? Because you have natural bull bias and you can't see bearish things. Other people who may be seeing our channel are showing something. I'm seeing a guy called Crypto Paradigm. Haven't heard him, but he's plenty followed, and he's asking the same question. Did he watch any of our YouTubes, or did he find it himself? Who knows? He may well have done all by himself, but he's asking, get out of Bitcoin, switch to alts. He's saying something that sounds very similar to what we say. Well done to him if he's got there all by himself. But he's looking at Bitcoin dominance in the bigger time frame, which is a great. I applaud him for that technically. And he's asking the question, when does it lose its momentum? One more squeeze. Gunga din. One more run into the trenches, Gunga din. You see a little bit of rounding is happening there, and you get that final little move. I'm saying 58.5. You just run that little bit of blow off, and then we could start to see the alts dominating again. Who's been the big weakling in the alts of the big caps? It's Ethereum's been garbage. You need Ethereum to start coming alive again. So let's have a look at our chart again. That was it there on the inverted. We said small, super low vol. It's either going to break the capping descending grind, or it's going to go for a final spill, in our opinion. We think it's going to go for a spill. Could we be too early? Could it have a downside, go sideways again, and maybe do one more? Maybe, but that moment is coming. That moment is coming, the moment you've all waited for, which brings us to the likes of XRP, which, given the popularity of everyone wanting opinions on XRP, we will turn to. But this could spill out the bottom. Remember, we warned. The falling wedge, you can have a spill out the bottom and then a violent reaction out the top. A spill out the bottom doesn't mean you're wrong. It's often what we call the look one way, go the other way. You first pop out the top. It's the type 2 falling wedge or rising wedge where you get the pop out the top and you break down in the end. So we could be about to do exactly that. Could I draw this wedge a little differently? Maybe I should have it a little bit more oblique like that. There's many ways. It's always easy to match these things and optimize them after the event while everything's still happening. I'd probably say that's as good a draw as any in terms of any. We did have that super low vol. Will we get it again and then get a breakout move? Or will it just reverse violently like a V and just go whop the other way? That would mean the big caps having to move most. Guess who doesn't take market cap away from Bitcoin? Number 396, doing a 20x, does not take big amounts of market cap away from Bitcoin. You actually need Ethereum, Binance, Solana to turn. You can also, it helps if ADA and all the others in the top 15 and 20 turn. But so far, Binance and Ethereum have done in the last 7 days, let's give it a refresh so it's up to date. In the last 7 days, Binance has done a minus 10 and Ethereum has done a minus 16.36%. That's the reason why Bitcoin is going up on dominance while going down by 6%. That's the reason why. Now, yes, it's now going up, and yes, Ethereum might have turned and started to go up, but that 7-day performance right there of the big majors are the reason the Bitcoin dominance is making its way higher. We need the likes of XRP. So let's show you XRP. Big news, but did we really get such a big reaction? Maybe there's some more clarification to come. The SEC, let's talk and look at the XRP scenario in our update. We aim to serve, to help, and we do these things as and when the moments are exciting. So let's tell you what happened. This is my concern overall with what's gone down here, and I was updating the community on an update literally today on this key point, because they were asking, and, what about SEC and XRP? Well, here's the thing. It's just reversed its spill. That's its high, that's its spill low, and it's come back into a similar range. So what I did is I took a 2-day period for XRP, let's try the 3-day and pull it through. And we said, since the last blow off, which we called, go check the video on an upside HVF there, and it started and made this big spike, and then the subsequent pullback down. If you just take and analyze, and that was 1 year ago, if we just do an analysis after that spike, after the spike and the collapse down, so from around here, which is roughly where we are today, we're in August, what has happened with XRP? So let's just show you. Again, from this period, let's do it in a different color so we don't mix, from roughly August down to here. What has happened? Well, our understanding is you have a hard floor. The hard floor is the point that has definitely stood, even with the recent tough tests. So I would say hard and soft floor is encapsulated by that, and your hard floor is here. doubling it up. So the hard floor is the lower half. That's concrete. Every time you've come in there, you've bounced, you've not run it, you've bounced, and including the recent drop, you've bounced. And here was another test of the hard floor. You've not closed once apart from that candle, which was a very sad day of some form of capitulation. I can't remember quite why it was such a significant one. But even this, so let's say I just extend that line so it just keeps that low wick just inside the hard floor. I didn't mean to have some of it out. So that's your floor, soft and hard. And then XRP this year, so we're talking this last year, we've in a range is what I'm saying to you. The hard ceiling and including the soft ceiling portion is like that. And again, I split it in half. Your soft ceiling is here. So roughly your 58 to 74 is the ceilings, and from 58 to 66, it's still a fairly high volume zone. You had a descending triangle. You stood for quite some time in there. We've lost our fat Koki. Let's bring him back. You spend quite a bit of time in there. Lots of candle wicks at that point. You have quite a bit of time there as well. This is all in the soft ceiling, and you were before that in the soft ceiling, and now all that's happened is you tested the low end of your range and you've gone back to where you were. As yet, I don't get excited about that. Price behavior shows the magnitude of the event. And it sounds like if someone told you, SEC, deal done, 125 million, write the check, it's all over, assuming that's exactly the case, I'm assuming the SEC would accept it or has accepted it or will accept it, etc. You should, if I told you a while back that the SEC case gets settled, you would expect a moon spike. That's not exactly a moon spike. Maybe more will come, and we'll take it seriously when it does it. In much the same way as Bitcoin's low momentum bounce and a little bit of a downturn was, it's not the vicious reversal yet. It then, later, second stage, grabbed some momentum. And that's on the data. The other thing that you forgot, that you weren't watching, was the data on unemployment. Why? Because the lie about the red-hot labor market that Jay Powell told you, the reason it wasn't a recession when we met the criteria for a recession, only it was for me, because when you set criteria and you meet the criteria, that's a recession. But anyway, the red-hot labor market. You can't be in a recession when the labor markets are so tight. Meanwhile, the participation is at ever lows. Male participation in the economy is depression level lows, 30s. It hasn't ever been that low. People, pizza jobs and all of the lies. Government hiring has never been so high, which is statist hiring, which is basically buying voters for Democrats and lazy people. Sorry, government workers, there are a few hard workers, but generally they don't do too much. They spend your tax money and they add to the deficit and they accelerate. Hold on, there seems to be a trend here. Ukraine wars, donations to Israel, money, hiring loads of government workers, importing immigrants and putting them in hotels. I get the trend here. It's throwing loads of money after bad, good money after bad, and that leads to hyperinflation. You get taxed from the bottom up and you get marginal tax rate from the top down. Squeeze you, squeeze you, squeeze you. Squeeze you, squeeze you, squeeze you. You've never had it so good, they'll tell you, while they take your testicola vandolas in that clamp and pop each little one into a googly little old mess. That's what they're doing. Your eyes are going to water. That's what they're doing. Leave the West. I've told you before, leave the West. Leave all of the West. People in UK said, I'm not leaving the West. Now they see what's happening. Leave the West, guys. What do you need to hear? Get your crypto. Take your kids with you. School them. Do it. You can do it. Leave the West. Anyway, you won't do it, and you'll come back one day and say that stupid ball guy was right. Okay, so that's XRP. And you got the 3 charts. Plus you got a bonus chart. Do you feel served? Do you feel entertained? Are you feeling loved? Did you hit the like button and subscribe? Our only source of payment, by the way. Note, no adverts here on their channel. Oh, it's not entirely true when we do the pre-recordings on crypto. I think they do have now, but not on live streams. So, if you appreciate the update, I feel tenuous, cautious reintroduction into the crypto market, choosing Bitcoin and Sol that are likely to overperform in the majors. Don't go D-Gen 2, the shittiest of shitcoins. They could just sit and miss out the whole bang caboodle, just in the hope of 100x. Slow dough is good dough. Lower volatility is good. Watch the gold market. You see, you're learning from Uncle Frank. You're learning from Uncle Frank. You're learning what to watch. The king. How many times has he come on this channel? 5 years, I've told you, about the king of anti-fiat. There is no word anti-fiat. We made it up, and we told you who's the boss in the pecking order. We told you gold. What happened? Gold started to turn. Bitcoin then started to follow. Gold got juicy and quite spicy. Bitcoin, the higher beta, got extra spicy. You weren't watching it. You needed us. That's why we do what we do. 360 degrees of analysis. Trading since 1987. I don't even know how many more years that is. It was 30-something once. It's probably getting close to 40 one of these days. That's the value. That's what you get. Understanding with a key methodology. Hunt volatility funnel method. What do you say? What's here you say? Are there any questions? Are there any questions? Let's see. Thoughts on Pulse Chain and incentive token. No real thoughts. I have a real problem getting a long-term chart on Pulse Chain. All I know is I sold the high by selling the open. Pretty much the high, not the perfect high. But that's, it's not a diss. By the way, one of them has a very flat macro possible HVF. I think it was Pulse X. I don't even know where to get a chart on TradingView. You guys need to. Hexicans and Pulsicans and all the other kins and the toucans and all the other cans must get these guys to get us proper charts, because I am technical before I'm anything else. Mexi doesn't have the history. It doesn't have much of the listing, I don't think. But right now, that's not a great chart on the downside. But there was a Pulse X one. It's not there has been worse. Obviously, it jumped. Then when I try to do Pulse X, I don't know how to get a Pulse X chart. It's a big, you have to do wrap pulse maybe, or you have to do something else. It's really tough. I go to the DEX scanner normally, and I kind of get partial charts. So technical answers require technical charts. At the moment, I use TradingView. So sorry, that's not a very good answer, but get us some more stuff. Sol is the degenerate gambler chain. You know what? You're quite possibly right. I'm personally, from the people that know, and we have lots of them that are ADA fans, they think it's a shoddy product with lots of failings next to something like Cardano, and many people that know a lot more about me say those things. And they may be right. Netscape probably was the better browser than Internet Explorer. But you guess what? BHS, Betamax, Betamax was the better recorder. The Japanese made a nicer recorder. They made slimline ones. The American ones were fat, ugly. But guess who had all the movie titles? They win for the wrong reasons. But actually the wrong reasons are the super right reasons. And sometimes things win for all the wrong reasons, but they end up the super right reasons. They've all gone to Epstein Island. I don't know. That's possibly what's happened. There's a danger word. Hit the like button right now. Go and fool the Google algorithm. Go and counter so that I can say danger words and naughty phrases to you. We need your support. They probably all did what they weren't supposed to do. That's what's happening. They probably set up with all the right organizations and all the right criminals. That's possibly why. At the moment, if you look at Solana's money chasing into performance versus ADA, Sol.D, let's have a look, and then I'm going to show you ADA.D. Because ADA this thing is turning around and rocketing. It's actually close to all-time highs. It's going for an all-time high. Let's just measure it for you. The Sol dominance chart from all-time highs. And everybody goes, yeah, get the one that's super low because that one's got more upside. No, it hasn't. Things that are low stay low. Sol dominance is actually 3.61% off its all-time dominance high. ADA dominance. Let's do ADA, the real serious man's project, with our friend Charlie Boy, who's a proper operator and a sincere chap. How's he doing relative to his all-time high? Well, there's his all-time high. And I know it hurts. I'm thinking of all my best buddies whose feelings I'm hurting right now. Well, it's 87.89. Now, do you want to buy? This is the trader's trick, by the way. This catches every rookie. This is what I call the penny stock syndrome. You go to a new investor, a new trader. Do you want to buy something that's down 87.89%, almost 88%? Two fat ladies, woohoo! We love a pair of fat ladies. Bring them on. Two fat ladies to the downside. That's how much I weigh. Two fat ladies, 0.8. I'm three fat ladies. I'm two fat ladies and 1/10 of one. Anyway, so do you want to buy that, or do you want to buy something that's 3% off its high? And all the newbies go, ooh, I want to buy the one that's 9% down, because it's got lots more to go up in. All the newbies, all the guys that bought penny stocks, they started all the things, they're all going to say, buy the 88.9% one down, because it's, it's been there before. It's got all this open space to move into. No, you buy the new high. You buy the new high. If you did that with TON and you did it with SOL, you would have continued to make more money. And at the same time, DOT is falling through its backside down, and ADA has had a bad season. Sorry, it's how it is. It keeps making new lows. It's not doing what it should be doing. So that is why you can call SOL degen. I'm not here to cast morals. They're all statists. They're all bastards. There's nobody looking after you. Get used to it. It's a grubby old world. No one's your real friend. They're your friend of convenience. There's no one no one got up out of bed that morning to make your day better. They got up out of bed to make their days better. So just take the facts, take the runners, and go with the runners. They ain't serving you. They're all trying to put you into the electronic prison. Some of them might not be, and they're getting ignored. If you need to make money first, you need to chase the winners, whatever their reasons. Guess what? Me hating on the state, on totalitarianism, on government, being a libertarian, didn't stop Microsoft, Apple, Schmoogle going to trillion market cap companies. It didn't stop the Mag 7 from happening. I hate the lot of them. I can't find it in me to buy the damn equities. I hate them. I want them to fail. I want them to crash and burn. Guess what? They're going up, and they're going to keep going up for a long, long time. That's the way of the world. Now, what do you want to do? Do you want to make money? Do you want to make money, really? Or are you morally pontificating? Are you casting a vote in Celebrity Big Brother for who's the nicest guy in the house? Fuck that. Okay, make some money. All right, let's have another question. I'm getting interesting questions. Whichever one pops for me, I've got to get different glasses on. Reading glasses for the fold. Let's have a look. Somebody else's question. Are you hitting the like button? Are you having fun? How many of there are you on here? 209. Check these. You know you're cheap when you buy those $15 one lens glasses. I break everything. I lose them all. I have about 10 all over the place because I don't give a shit. I can sit on them. I don't care. Indeed, it is how it is. Bad performance in price. ADA. Check bonk and ETH, macro HVF. I think we've had bonk brought to us before. We've covered it in smaller, in trading days as well. And it may well be very interesting. Let's have a look. Bonk. What's its code? You got to spoon feed me, bro. That's who I am. Is it Rapteth? What is it? Bonk. What's its actual code? Is it BNK? Yeah. Sniper Jordan, speak up or forever hold your peace. What's the code? So what else is going on? 214 of you on the ball. Have you all smashed the like though? Have we got 214 likes? Or you hate it that we come and give you updates, that we try to tell you the 3 things you should be watching, like the Bitcoin dominance, like the gold chart that takes you out of your space. Are you learning? Are you getting smarter? Will you get wiser the next time this happens? Will you recognize it's a time to be paying close attention because we're getting the fine details. We're reading the entrails of the slaughtered lamb. Yes, the fleecy lamb. No. Yeah, the eyes of mince pies. So it's just B-O-N-K, but I did bonk S and I got nothing. It might be WETH. So let's do bonk USDT, and maybe we have to do WETH. Bonk WETH. With who? Who am I bonking? Yeah. No. Sorry, bud, no. This is the problem with you DJs. Yeah, you put it on a log scale chart and you'll log scale fib and you'll log scale everything to try and get a bit of pump. I'm in late. Did you cover XRP? Too late, fine fellow. Michael Dadamo, we covered it. FBTC looks wrecked. So I'll finish on FBTC. That's the last of our requests that we'll do for the men of the ministry. And you can have a little look. Remember to sign up. So this is a nasty old puke for Ethereum. So I'm going back to the camo glasses and the blue light ones. It just kept plumbing new lows. It just kept plumbing new lows. Someone was saying, in fact, I think it was Rao that was saying ETH has been there's some company that's going bust and has having a bit of a unwind and selling all its ETH. Well, that might be the reason, but somebody should be happy to buy it if it's such a great token. At the moment, this could be its third impulse fall out the bottom. That could be impulse 1, a very bloated impulse 2. It could be soon. And remember that dominance chart. We really actually, for dominance to turn on Bitcoin, which is going to be great for Sol and all the others. Sol is growing against Bitcoin, though. I showed you with Sol dominance. We can show you Sol BTC as well. It is growing against Bitcoin. It's one of the very few. But yeah, it's a nasty old puke, and I agree. FBTC. Bonk divided by ETH. Okay. Well, ETH falling is going to do a lot of cryptos, make a lot of cryptos look good. Yeah, I think I answered that one on Bonk. Excellent, guys. That's it. Don't forget, hit the like, book a call, click the link, be the first to know what we're thinking, when we're thinking it. And there's always a signal to watch. Our Substack was out warning that the USD JPY was signaling stress. Why? Because the big portfolio long trade was turning and turning hard. We said that it was out on the 26th. We were talking about it a week and 2 weeks before, that it had turned, it had turned, it had turned. And that was meaning something. It accelerated in that turn. Now everybody on Twitter is an expert on the yen carry trade and talking about it. And it was in our 3 reasons. We love a 3-reason list, don't we? With a bonus. 3 reasons why the recession is harder. Risk off, yen fail. Who understands these things? Right here with us in our community, with the market sniper, the crypto sniper, the reset sniper, and all these top guns and all the other members, many of them been with us for years, that have learned many of the other things and are watching, keeping all eyes on the front. Our community of awake HVF traders are the best in the world. These are where real people come to learn and grow and build their wealth. And it's amazing people won't invest in being surrounded. Let me tell you, there's reasons people spend big amounts to join private business clubs in London, to sit next to a certain quality of person when they're having their cigar, because they're making one conversation and one trip around the golf course, bigger deals and bigger business than they ever would have done sitting in the local pub next to the working class builder. That's not to say anything wrong about the working class window. You want to win, surround yourself with winners. How many times you've heard you've got to be around that you are a summation of the 10 people you most associate with. Start associating with the IT geniuses in our community. Many of them working in corporate tech, many of them working in private technology, engineers. I'm always impressed by the quality of people that we have in our community. Why? Because it costs something to get in. Yes, it does. And you get quality, and they're patient and they learn. They're not teenagers. They're not squeenagers. We've got a great community. You should want to be part of it. You are a summation of the group of the people that you hang out with. Make the investment. Stop losing. Stop losing big. Start controlling your losses. Get high rewards to small risk trades. Be early. Don't wait for confirmation. Most of what you hear in technical analysis is an accountant's take of the options. It's all wrong. Most of it is all wrong. Indicator based. Wait for confirmation. There's so many things I have to debunk. You'll get it straight. We don't do it. Speculating is a risk game. Manage the risk and take the risk. Don't wait for confirmation and screw your risk reward up. So many other things to debunk. You get that from me on a daily, almost daily update basis, sometimes on big days, multiple updates. You get the non-farm payrolls with me. You'll get the community webinars with us. You will grow. Those are the benefits. An amazing platform. We are highlighting. We've added new features, potential high quality setups. Everyone is adding setups. And we go around and we score the ones that are potentially super interesting. Plus, we've added, for no extra cost to all our communities that have been a year long standing, a drawing tool that calculates reward reward, risk reward, tells you where the axis is, tells you whether your inflection points have been well chosen. We'll give you more detail about the HVF than most people understand, including volume by price and matching all of this up. We are continuing to add tools, and you're not in a Telegram group. That's why you think it's expensive, because you want to go to a gentleman's club that's in a shithole. No, it's a private community group. No one shills anybody other things. We have rules. People go in there to talk about the market and get better. They don't go in there to try sell each other. Here's my KuCoin link. Go make me $5 extra when you sign up. It's not that place. It's not that place. It's a high-quality place for high-quality people who want to learn, who want to grow, who want to do powerful trading in crypto and recognize that if they're in the right token, which has been Bitcoin dominance and the likes of Solana during the early stages of this run, they will make a whole bunch more money than if they're sitting in DOT and any other number of tokens that have done absolutely nothing. And that is unfortunately why I sold Pulse at the high, with the hype of the cult wanting to get in to Pulse token. And I wish it success, but there are times to get out. You are not a hodl king. Hodl kings in the wrong tokens die. Even Bitcoin could one day become the wrong token. I will not let markets take large percentages out of me. And that is known as loss management. It is the foundation of success in trading. You need to get that. You need to understand that. And it goes for investment too. We do not ride $100 stocks down to 0 cents because that's a bankruptcy. That's a big stuff up. We do not let it happen. There is a point where you leave. Just like everything else in the world. Marry your girlfriend, make her your wife. Don't marry your crypto tokens that sold you a great story, that had all the dreams and the joys of things. Don't marry a hero who will let you down. That includes me. Make your own decisions, build wealth, use rationality, trust in nothing but process, and you will start to win. Manage your losses and trade high reward to tight risk. This is the keys to your crypto bull market, and I'm here to bring my community through to that. That's your update from me, the Crypto Sniper. I'll wave you goodbye. I'll give you a salute. God bless you. Stay well, and we will see you when next there is news to report, after, of course, serving all those that deserve to be served in good time before you. Until next time, catch you later. Bye for now.